Welcome, everyone. Today's show is how to leverage and prepare your credit and income to get into the best rates in buying your next home.
So glad we're having this chat.
I'm here with Jessica Couch. Jessica, how are you doing?
Great, and ready to make some deals. And this is exactly the information we need for our new year for those people that set home ownership as a goal or rentals as a goal. So I'm so happy to get into this.
That's exactly right. So just so everyone knows what we do and what our show's about, it's about mortgage and real estate. And our mortgage and real estate brokerage provides a streamlined white glove service approach with each and every client, ranging from first-time home buyers, homeowners, and real estate investors emerging into the housing market. When you work with us, we donate 10% of our profits to the Sweet Dreams Foundation. So Jessica Couch sits on the board, and you can we thank you for those who listen to our show. Be sure to give us a call, text to 916-872-7177, or log on to promortgagerealty.com if you have any questions about the foundation or if you'd like to talk to Jessica about it.
Yeah, love that.
Yeah, so going into this, today's show, again, leveraging and preparing your credit and income to get to the best rates and possibility of buying your next home.
Yeah.
And this is the necessary evil of buying a property.
It is. And it reminds me also, I was talking about this yesterday with somebody. I think, speak this language of real estate and mortgage, right?
Yeah.
And I'm so quick to just rattle off all these things like, here's what you need. Yeah. And people are like, wait, what? I didn't have a pen. So I want to make sure that we're giving everybody the website and then your cell phone number so that if you're listening and you're like, I caught 5 minutes of that, where do I start? They can get a quick cheat sheet and not feel overwhelmed with the amount of information that we're about to lay out.
That's right. And we're optimizing our site to where you're going to have a ton of information on promortgagerealty.com. The name of our company is Pro Mortgage and Realty. We do it all. So,
and then your cell phone number, too, if they want a cheat sheet.
916-872-7177. We'll send that over after the show. And you can also follow us on the YouTube, which Pro Mortgage and Realty, subscribe there, and you'll get all the latest information coming up. So getting into this, before we get into this, I'd like to talk about the normal news.
Okay, I'm so glad you report this because this is something else I was just chatting with someone about. There's so much information out there, and to know which one you can trust and then dissect all of it and then make a decision based on that. I love that we have the show as a timeline so that we can go back and look at what information you've given in way of predictions from all of these, professionals that you pay to follow what is going on in our market as it pertains to, our local market. And then you break it down in easy English every single week.
Yeah,
so
I
need it. Our team needs it. I mean, we need to know where we are right now and where we're heading. So give us the good stuff. What's going on?
Well, just offlecking what you said, it's challenging because you're reading all these economic data reports and news and different events.
Conflicting information.
Yeah, it's really hard to dissect as a normal consumer that doesn't do this every day to understand which news to believe.
Yeah.
And which neighbor to believe or what person you talk to at the grocery store you believe. So with that said, we've been saying rates are on the downward trajectory, right? A lot of the economic reports that have come out based on all the numbers that have been issued by the Fed is stating that the Fed is on a reserve basis. They're saying we're going to hold off on rate cuts to probably around 3 rate cuts by December of 2024.
I'm going to go on record and say I'm counting on 4. I am counting on 4 before December.
You're right. I personally believe the same or more because the consensus of a lot of experts out there that specialize in this field of the economy, they're saying it could be anywhere between 5 and 6. So
interesting.
Okay. And so it's if you meet in the middle, that's 4.5 rate cuts.
I'm counting on 4.
Let's go
counting
for 5.
on 4. Yeah.
So if anyone's interested in knowing more, keep listening and you're going to find out some information. But I thought that was great information on the 26th of January. There's going to be some major information that's going to come out and it's going to impact where rates are headed and how soon that rate cut's going to be. Because we already experienced a rate cut.
Yeah.
We were almost dating the 8, and on FHA loans, we're in the, I quoted an interest rate yesterday on an FHA purchase for 5.749%.
Dang, so below 6.
Yeah, and that's on
amazing.
FHA and VA loans. When it comes down to conventional, depending on your credit score, really determines on where that rate's going to be, and they are higher than FHA. So you're anywhere probably between the mid 6s to mid 7s, depending on down payment and credit score. So just for those out there listening. This news came from the MBS Highway. I subscribe to it every year, pay a pretty penny to listen to Barry Habib. He is the mortgage-backed security market guru. He is the person they call, kind of like how Alan Greenspan used to be, the person that everyone wanted to talk to. This is Barry Habib. He flies all over the country and for everyone to listen. And every morning he gives me a report. So I'm not smart. He is. I just copy and listen to what he says.
You are smart, Ian. But thank you for reporting. Okay, so what's the Beebs got to say for us?
The January NHB housing market index, which measures the builder confidence, it rose 7 points to 44, remaining in contraction, increasing significantly to the highest levels since September. Okay. All of the internal rose from the future outlooks looking bright. Current sales rose 7 points to 48. Future expectations rose 12 points to 57 expansion. Buyer traffic rose 5 points to 29. This is important because what it's telling us is that everything is going up in the sales, the expectation of sales, and the traffic for new home construction. Okay?
Oh, we're seeing that all over.
It is.
All
it
over.
Is. And that's a huge thing. The level of increase of equity that Freddie Mac had anticipated is increased to 9% from the previous anticipation of 6% for 2024. So that is an additional 3%. They're expanding that outlook on what percentage your home equity will raise during that time. You buy now, and a year later, you're looking at about a 9% increase in value. That's something to earn.
Yeah, definitely.
That's a $500,000 home. That's $45,000 likely in just equity that you're going to gain. And that's also going to be the increase of price.
Right. Not to be understated. I mean, that is huge. That alone is huge.
Yeah. So if you're waiting,
there's a cost to wait.
There's a cost to wait. Sure, rates are going to be better. Your payment may be lower, but it may be lower by $300 or $400 a month.
I'm going to challenge that because with prices going up, with rates going down, your $3,200 mortgage is still $3,200.
Yeah.
That didn't change. And when we're looking at a purchase price, your taxes are higher because that's based on $605 instead of your $589 that we can get right now. So there's a cost to wait, and that mortgage payment is likely going to be the same or off by dollars. So I think this is like tripping over dollars to pick up dimes. Like, you're looking at the wrong thing, man. If we can get focused on what that payment comfort is and what you could afford and work on that, and then your long-term goal or 3 to 5 year short-term goal along with your long-term goal, we can really have a better plan for you.
Well,
the waiting,
you're exactly
there's a
right.
cost.
You're exactly right, Jessica. Let's get granular with this. If you got an interest rate difference of 2%, let's say, and you jump into this house right now at, say, 6%. In 2 years, rates will be 4%.
Right.
Estimate.
If not sooner,
Hopefully, right? So
I'm counting
you got
on it,
6%. So now if you're waiting for rates to get a little lower, down to like 4.5, where it's even better, you may save yourself $300 a month.
Sure.
$300 a month times 10, $3,000 plus 6. So you got $3,600 you save over 12 months. Versus the equity of $40,000 to $50,000.
Right. And are you really saving it? Because when you look at all of the buyers that we helped last year, all of them but one got at least a 5% credit. That's what I can get when we have inventory. Because inventory is everything. We have inventory right now. Houses that have been sitting 65 days on the market. So we can get you a good price and we can get you a credit. So your $3,600, forget about that. $3,600, you need a 5% credit. I need a buy down. I need closing cost credit. A lot of times we can negotiate repairs on top of that. That's what you need.
And these credits, just so everyone understands, are coming from the seller.
Correct.
This is Jessica negotiating a credit from the seller to pay for your buy downs and your closing costs, saving you more money up front. When you buy a home, you have your down payment and you have your closing costs and you have inspections.
Right.
And so
and an appraisal.
And
and a cost to buy the rate down.
And then
and
a fresh coat of
repairs.
paint when you move in, and then furniture to match the paint, and you can go on. So getting off track, but I think everyone gets the picture by now, because you will kick yourself in the pants. This is like pre-COVID numbers. So if you bought a house before COVID, you were going to experience the same type of trajectory, especially with the hopefully new presidential candidates that are going to come to the table with, if Trump gets in office, hands down, our economy is going to be busting and house prices are going to skyrocket once again. So
I'm glad that we are on a recording so that we can go back to this.
All right.
For these people that are telling me like the market's going to crash, I'm like, that is 100% incorrect information.
Yeah.
But I think I'm so glad we have this recording to go back to.
And I don't mean to get political, but it's a fact.
Look at the
numbers when he was president versus what we have. So the initial jobless claims is kind of another point of news that I like to talk about, which measures the individual filings for unemployment benefits for the first time. For the first time in the entire presidency, the initial jobs claims fell 16,000 to 187,000. Lowest levels since the 60s. But, think about this. Population growth and Christmas hirings and holiday hirings.
Right. No, that skews all the numbers.
This is all December's numbers. So what's going to happen is next month you're going to see that change, and then rates are going to get better because of that. And they're going to continue to get better. So these are some points that I really like to break down for people. Rates will be moving down. They have been moving down. And just keep a lookout. If you're thinking about buying, then you should stop thinking and start doing. And hopefully this show, where we're talking about credit, will get you in the position to do that.
Yeah.
So getting into this, Jessica, I know we've got a lot of things to discuss, but the introduction regarding credit's a huge impact on what you can borrow and your legitimacy of who you are. When I was younger, before I got into the professional world, I was, 16, 17, 18. I didn't care. I got those CD packages, get 10 CDs for a penny and, collection after collection after collection and parking ticket after parking ticket after parking ticket, living on my own. I didn't think anything happened. Hey, I'm not going to pay it. Great. And then next thing you know, I got into a telemarketing business with a mortgage company and in like 98. And I'm like, I'm curious what my credit is. So I got to pull my credit with one of the loan officers there, 491 FICO score.
Yes.
No. I win. I have not seen anyone with a lower FICO score than the one I pulled on myself. And this is back in 98. I had a 491 FICO. I was a piece of junk when it came to being a responsible buyer or borrower for that matter. And so
how did you turn that around?
I talked to the guys in the office, the loan officers. And of course, as a loan officer, you need to know how credit works. And they just gave me advice. And we did a lot of things that really kind of helped impact the increase. And within 2 years, I got my score up to a 720. And so we are coming up on a break. You don't want to miss this. And we're talking more about leveraging credit, what you can do to get your credit score in the position to buy. And you don't want to miss it.
Yes.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916. Or visit ProMortgageRealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 01745667.
Hi, I'm Ian Boshoff, CEO of Pro Mortgage and Realty. At Pro Mortgage and Realty, we've streamlined the home buying process, providing you the fast mortgage pre-approval and top-performing real estate agents that will negotiate the best price for you, all under one roof. If you call or text to 916-872-7177, that's 916-872-7177, we'll help with those out-of-pocket expenses like home inspection, appraisal, and closing costs. We make it easy. From down payment assistance programs, no income qualifying loans to conventional FHA and VA loans, we have you covered. We'll help you find the right financing program and the right home. Be sure to ask about our temporary buy-down program that's negotiated towards your interest rate and can end up saving you thousands. Work with a team that's with you every step of the way. Work with the pros, Pro Mortgage and Realty. Call 916-872-7177 or visit promortgagerealty.com.
NMLS number 351319, DRE number 017456667. And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
And we're back. Real Estate Profits, talking about how to leverage credit and prepare your credit and income to get into the best rates of buying your next home. I was just going over how much of an amazing piece of work I was back in 98, trying to fix my credit at a 491 FICO score, got it up to 720 within 2 years. And why is credit important? Well,
I think the moral here is if you could do it, somebody else could do it
absolutely,
too. And
absolutely.
you can help with that. There's not even a fee. This isn't a credit company. We're just doing this from the goodness of your heart to see. And I've seen you do it with several of our clients. You've taken them, given them 3 things to do. Sometimes it's a lack of credit. They don't have any credit.
Yep.
Like our one friend didn't have any credit. And you said, open 3 lines, use this much. And we checked back in 3 months and his score was then eligible for down payment assistance.
Yeah.
And you were able to give him a pre-approval, and it took 3 months. So not always the situation, but if you yourself could take your credit score from mid-4s up to mid-7, it's possible, and there's a plan for that. So I love that you're laying out the plan.
Well, let's talk about how lenders look at credit. They're going to look at your credit history, the length of credit that you have, and they're going to look at if you pay your bills. Right? And you don't need a lot of credit to purchase a home. You may need 2 credit cards, small, $300 balances, maybe a car payment. But if you're thinking about building your credit, hold off on getting your car. Buy a junker with cash and pay it, and try not to have that, but you get 2 credit cards. That's all you need. 2 to 3 credit cards. Pay those on time for 6 months to a year, and just make the minimum payment. Buy coffee. Get a secured credit card. If your credit is shot, get something that will build credit. Utilities aren't really the play. I know they do Experian Boost, and Experian boosts that in, but it's not true credit. So it's definitely important to do that, and that's how lenders are going to look at it. Let's go down the line, because we've got student loans, collections, charge-offs, bankruptcies. We've got business loans versus personal loans, and so I really want to let everyone understand what to deal with. So when you're dealing with, say, a collection versus a charge-off, okay, collection versus a charge-off is very important to understand. And how will you know? You'll go to free sites like Experian.com.
Okay.
You can go on to creditkarma.com. That's Karma, Credit Karma. And these are free sites. I don't get anything from them. You go on and you get an idea. So Credit Karma pulls up Equifax and TransUnion. Experian.com, it's self-explanatory. So there you got all your 3 ones. And not every trade line or not every collection will report to the same bureaus. Usually credit cards will report to them, but maybe a collection will only report to one bureau, and you're not seeing it. So it's important to get those 3, right? I don't want to pull your credit. I don't want to do a soft pull credit because, we need to understand where you're at before we go down that road. So if you're unsure, you can go on to promortgagerealty.com, shoot a message, say, I'm interested in fixing my credit. We can go through that. But the main thing is, I've seen this before. People have paid off charge-offs, and charge-offs are written off collection debt that have been on your credit for 6 to 7 years. And so what happens is they sell that debt off, and they no longer own that debt. Therefore, even if you pay that off, it does not help your credit score, right? And so the best thing to do is look at what you have on your collections, and if they're anything over $2,000 or $3,000, consider getting into a payment plan at pennies on the dollar. These guys are scum. These guys are dirt bags of the business. So they're buying your debt at like 10 cents, 10 cents on the dollar. So you can negotiate with these people and do so, but make sure you have the conversation. If it's in collection, if it's a recent collection, hey, what is it going to take to get this off my credit, right? What is it going to take, and then have these conversations. Will you guys delete this off my credit report if that's going to be the case, right? If I pay this, will you delete it, or if I enter in a payment plan, will you please send me a letter that this item needs to be deleted? And then that is what you need to do. Make sure, definitely, if you're uncertain on how to approach these debtors, give us a call. We'll walk you through it. And that's a key thing. The difference between charge-off and collection is huge. So, and now even if you pay off a collection, it's not going to improve your credit, right? You have to have it deleted from the bureaus. And so that conversation is imperative to have. Now, what can help? And I know you know this. Jessica, she's been a real estate agent for 25 years, and she's also she basically knows my job.
Well, I mean, I think to be a good agent, and I love that we have this team, because when I very first got my license in 1999, that's what I went to work for, same company I bought my house from. It was the loan and the real estate all in one. You were talking to one couple, husband and wife, little family business. We knew what was going on. It wasn't a separate, we have to call somebody in in Ohio on a different time zone. Like, we knew it was happening. So I love having that synergy. And you need to know what kind of loan is going to be best to get people into. And you need to know how your credit is impacted. And we need to know what your debt to income ratio is so that we can switch that up. So I think to be a good agent and to really represent your buyer properly, you need to have all that information. I don't underwrite the loans. I don't know how to process. I know enough to make sure that our clients are in the best product. And we usually handle that together. We get in a call, and Ian really cares about our borrowers and what their goals are. So when we can get on a 45-minute call and structure things that are going to be best for your family, that's how we're able to make it a win for you guys.
And people get scared. They go,
it is. It's a big decision.
It's really, I know talking to the lender and talking about your credit is like going to the doctor and pulling your pants down and saying, here, how do I look?
Right.
And it's not the most comfortable transaction to deal with.
Sure.
I've seen it all. Remember, I said my credit was 491 back in 98. I've seen it. I've been there. I know how it works. So it's mainly is what can we do to get you into a home? And that's our goal. And we enjoy this. This is a part of why we do it. We love seeing people's eyes light up when they finally have homeownership and see them get in some equity and generational wealth built from real estate. And it's, real estate will always go up. It's something that if you invest in a home, you will never regret it unless you can't afford your payment.
Well, you make your money when you buy it.
Yeah.
That's when you're making your money.
Absolutely.
This is a cycle. So you decide when you're going to sell. And if you're not going to sell in a downturn, you're not going to lose money. That's what you need to keep in mind. You make your money when you buy it.
Right. That's a good point. The biggest thing that I see that helps your scores skyrocket, let's say this happened 2 months ago. Pulled credit on a couple that wanted to purchase a big home. It was a jumbo loan, and
that's a big one.
Their credit score was down at like 710. And on jumbo and conventional loans, conventional are not FHA, they're not VA. You typically need a better credit score, and you need to be a stronger buyer. But your credit score has a huge determining on factor what your interest rate's going to be, which will result in what your payment's going to be. So, I mean, we're talking a full 2% range difference. It can be that much. So a difference between a 700 to a 740 is it could mean on a jumbo loan $300 a month. Right? So what do you need to do to prepare? It could be as simple as a credit card that's maxed out, or you pay it off each month. But what you have to do is you have to pay down this credit card prior to the next billing statement being issued, because that information when the next statement is issued. When that statement is issued, that's what reports to the bureaus.
Well, and I think a lot of people don't even realize that. They're like, oh, my due date is the 20th, but that's not when they're reporting.
Yeah.
So if you call and find out when they're reporting and you have that balance paid down to that 10% or whatever your lender has advised that you want to keep, right? Because you don't want it to have a zero balance or it doesn't show that you're using the card.
Yes.
And without using your credit, more credit will not be given. And
that's right.
Your score.
That's a good point. Because if you have let's say a $500 credit limit and you're just new to credit, pay it down to about $100 balance. You know, you have about 100 on there and everything else, and do it. So you'll look at the statement date and you'll see when they're issued. It'll say statement date right there, and you open it up, and if it's 3 days until your credit card's due, or until your statement's issued,
right,
you want to pay it down. So
good info.
Coming up on the next break, we're going to talk about what is the average credit score in the United States. Where do you fall?
Okay, I'm going to take a wage.
Okay, we'll be back after this.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and VA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit ProMortgageRealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017456667.
Hi, I'm Kimberly Shepard with the Shepard Group. With decades of combined experience, we know what it takes to help make one of the biggest decisions of your lives. Whether it be selling or purchasing a new home, the Shepard Group has the strategies to maximize your profit or negotiate the best deal when putting an offer together and getting it accepted. We're driven by being the difference maker and understand how stressful it can be when making your next real estate move. And we'd like to help you by covering some of those out-of-pocket expenses associated with buying a home, like home inspections and appraisal fees. Giving back not only strengthens our community, but it fills our hearts. That's why we partnered with local nonprofit organizations to do our part. We believe faith without works is dead, and so we ask that you put your faith in the fact that you were right where you were supposed to be when you heard this message, and trust that when you call us, you and your family will be in good hands for all of your real estate needs. Call the Shepard Group today at 916-410-4455 or visit theshepardgrouphomes.com.
The Shepard Group, powered by Pro Mortgage and Realty, NMLS number 351319, DRE number 017456667. And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Welcome back, everyone. Credit is our game here. This is what we've been talking about.
Oh, yeah, you were going to tell us what the national average is, right?
Yes. If you're just tuning in, we've been talking about credit and how to position yourself to buy a house and what to do. But if you want to take a guess, I don't know if you do, but
I'm going to guess. I'm going to guess it's 550.
Oh, dang, no, not there, not
really?
there yet. The average Vantage score, Vantage TransUnion, I believe that's what it is on consumer debt. The United States was 701 as of September 2023.
That's so much better than I thought it was going to be, because we've been talking a lot, especially just before the holidays, about the national spending and credit being so high up.
I don't believe this number. I don't believe
it's a little inflated, you think?
I think so. Because everyone's in debt. We got record $3 trillion worth of debt in 2 years.
And that lowers your credit.
And that's
when you're
just
maxed
credit
out.
card debt.
Yeah.
You know, that's the most we've ever had in the history of United States of America.
Dang.
So, I mean, we're talking serious debt. The highest average score was associated to the baby boomer generation at 740.
Wow.
While Gen Z was the lowest, averaging at 663 FICO score.
Interesting.
So Generation X, you're at 700. The baby boomers, 740. The millennials, 683. And 78 and older, I don't know what generation that is. The silent one, we'll call it. I'm not trying to say that, but that's what it says. Okay, don't get mad at me. This is according to USA Today,
right,
so
yeah,
you can yell at them. But 738 FICO score.
Oh, that's funny.
So this is a big, I feel like these numbers are too good to be true because of all the debt.
Yeah.
And
No, I totally agree.
Yeah.
That lowers your score, the debt to income.
Yeah.
And a lot of people don't realize that. They're like, oh, I have great credit. Everyone keeps offering me credit card
Yeah.
deals, and they just max them out. Or they pay them off, but they're not paying them off on the date that it's being reported.
Right.
So it's not counting for them, or they pay off half of it.
Yep.
It's an algorithm.
Yep.
It's not like an exact science. It's an algorithm as to how this is done and how they're reporting. And when you know what that trick is, you can beat the system.
Yep.
And Ian can help you do that because he knows the tricks. He's done this for 20 plus years. You need somebody that knows all of those tricks so that you can beat the system. It's a game. It's an algorithm.
Tricks are fun.
They are.
Now, another thing is bankruptcy. And
Yes. Can you speak to that?
Yeah, bankruptcy's big. It's because people with this debt, you're going to see more. Chapter 7, Chapter 13, or Chapter 11. Chapter 7, you wipe out all your debt. You need to get court approval. Chapter 13, you pay back a portion of that debt with the trustee, and you got to go to court and you got to show your financials. And again, it's not comfortable.
It's a process.
Yep, and it's a process. Chapter 11 is a business bankruptcy. So there are plenty of bankruptcies. Everyone gets them. I have been lucky enough not to have one. I've held out, hold strong like Braveheart, hold, and then the economy kicks in, so you're good. But there's different institutional backings, right? You have Fannie and Freddie, they're government-sponsored entities. You got FHA and VA. Again, all these are GSEs, government-sponsored entities. FHA and VA and USDA are a little softer on credit and softer on allowances of what you can have. So on the way banks look at it, on Fannie Mae, with a foreclosure, we're not talking about foreclosure. With bankruptcy, it's Chapter 7, when you wipe everything out, 4 years from discharge or dismissal date.
Okay. Well, and I think that's important to mention because it's not the date you file for bankruptcy. And I have, my parents pulled this every 7 years. Every 7. They were like, another BK. I'm like, dang, you're allowed to do it. So for those serial bankruptcy folks, good to know. This is not from the date that, and they were buying houses the whole time. Like, I'm telling you, homeboy had a plan.
We need to get him on the show. We need to get him on the show. And I'm not condoning not paying your debt.
Just saying, you can do it, but it's not the date that you file it. It is the date that it's discharged, and that can be, a year later. So we're looking at discharge date, 4 years from that date to be able to purchase a home.
And let's clarify this. This is just 7 we're talking about. Okay, for Fannie Mae, Freddie Mac, it's 4 years. Okay, with the FHA, it's 2 years from discharge date. With VA, 2 years. With USDA, it's 3.
Okay. That's nothing. 2 years? You can wipe off all your debt.
Yeah.
Just wipe it. Okay. Wipe it. Build your score back up and go.
We're not condoning.
I'm just telling you, there are loopholes, and I'm not going to make this political.
Can.
But if you look into how many times Trump has filed for bankruptcy and the different types of bankruptcy, it's legal. There's a loophole. So if you are in that boat for whatever reason, you had to file bankruptcy, you're looking at 2 years later.
Yeah.
And you can build credit. Call Ian. You want to build some credit, you can build it pretty quickly. 2 years later, that is a solid plan. If you're in a pickle right now,
if you're
to
in a
be
pickle.
able to change your entire circumstance and build some legacy for your family, 2 years later, start on a trajectory to get yourself there. Yeah, and that's not that long.
There could be an underlying issue there too, though. If you're approaching bankruptcy, it's either an income issue or a spending issue, and so you can't break habits. You can break habits, and it would be a good idea to really, open up and find out if this is something from an income issue or a spending issue. If it's an income issue, then you need to make more money.
Sure.
Find a side hustle like everyone else. Everyone does everything. Everyone's got other side hustles. We have side hustles. I've got a side hustle. And I do mortgage and real estate every once in a while, real estate, but mainly mortgage. But side hustles are the name of the game in this type of economy. So think about it, get off the couch, maybe hustle a little bit more. Chapter 13 is a little different ball game because what you've done is you say, hey, I want to still be responsible enough to make good with some of the debt that I borrowed, right? And I want lenders to look at me a little bit better. So on Fannie Mae, they have a chapter. They have 2 years from discharge date on Chapter 13, 4 years from dismissal. Okay, I have been, and then there's 2 years from discharge date with Freddie Mac. So that's good to know. FHA, there's 1 year of payout. Okay, what this means is if you've entered into a bankruptcy and you've made 12 on-time monthly payments
with your trustee,
trustee, and you get a payment history from the trustee, you can get a loan. Okay, I've done
excellent advice.
I've done this before. It's nothing crazy. Hold on, there's an alarm going off. I don't know what that was. And then the other piece is you can do 1 year. So basically 1 year on a Chapter 13 in bankruptcy, meaning it doesn't need to be gone. A Chapter 13, 1 year for FHA, VA, and USDA.
Wow.
Jumbo, different ballgame.
Sure.
They want 7 years at minimum. Clean, nothing, nada. And also, some of these rules may change if you're bringing in 20% down.
That is a really good point. And you don't have to necessarily bring in 20%. Let's say you're somebody that's in this boat, right? You've done Chapter 13, right? So there's somebody I'm thinking of that had a bunch of lawsuits. And I said, you need to file Chapter 13.
Right.
You're about to lose everything. And he said, no. And I'm like, let me just set up an attorney. And then the attorney was like, yes, this is precisely what needs to happen immediately, or you're going to lose all of your properties.
Right.
So he filed Chapter 13. He paid all the debtors off and was able to restore his credit. His credit was like 425. I'm telling you, it was lower than yours.
Mine?
It was terrible. So you were able to restore this. And then, for this guy, it was more recent. But, point of the story is if you don't have that 20%, you could get gift funds.
Yeah,
you have a grandma,
a
grandpa, a mom and dad that want to help you out. Maybe you're living at the parent's house and they'd like you to move down the street. You can borrow from a 401k. There are ways to get that 20% that are not you on a side hustle coming up with 20%. Because I think of that and I think, oh, that sounds like a lot of money. How would I come up with that? But there are so many resources that Ian can give you when we have that strategy call and how we're going to work this out that you may not be immediately thinking of that we can borrow against or get gift funds from family to be able to make that happen.
Yeah, let us help you, not Google.
Yeah.
And your neighbor.
Well, Google it all you want, but come to the experts if you're looking for a plan, because Google is not going to set that up for you.
There is light at the end of the tunnel. Okay, so we touched on bankruptcy. Now let's talk business loans. This came really hot for PPPs and the SBA loans that came out for businesses. And the one thing that you need to make sure of is when we're looking at credit, we're also looking at your monthly revolving debt.
Yeah.
And so we have to take into account what your revolving debt is, plus the proposed new housing debt. And so if you've got a lot of debt going on, it's really important to understand if you're going to take a business loan or a business credit card, make sure that it's tied to your business only and not you're personally guaranteeing it, right? It's not coming up on your personal credit.
Really good
There's
point.
a difference. You get a business and you get an S Corp or an LLC, you can get a business card. You need to ask them, is this going on my personal credit or is it going on to my business credit?
Well, and if you're a corporation of any sort, you have a separate EIN. That is right. Like your social. It's just interesting because I talk to so many business professionals, and as we get into conversation, I'll say, oh, how are you incorporated? Oh, I'm not. What are you doing on your taxes? Like, what? So I'm so surprised sometimes when I meet people that have been in business for some time that just don't quite have that down to make sure that they're setting themselves personally up properly for their next move. Yeah,
that's solid advice. What are you going to do with your credit? You need to give us a call, 916-872-7177. If you have questions during or after the show, log on to promortgagerealty.com. We'll be back after this.
I'm Jessica Couch. When you're buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and that has the skill set to take care of every single detail. We will get you top dollar if you're selling, and we'll help negotiate the best deal if you're buying, all without spending $1 out of your own pocket. Work with Pro Mortgage and Realty. At Pro Mortgage and Realty, we cover those out-of-pocket expenses like inspections, appraisal, and help with your closing costs. It's our commitment to make your next real estate transaction easy and stress-free as possible. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community. We've partnered with local nonprofits, and we give back. Come work with the team that's got your back. Call or text today. Jessica Couch of Pro Mortgage and Realty, 916-532-8916. Or visit us at promortgagerealty.com. Work with the pros.
NMLS 351319, DRE 01745667.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916. Or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 01745667.
And now more with the Real Estate Prophets with Purpose on AM 1380, The Answer.
All right. Thank you, everyone, for tuning in to the Real Estate Prophets with Purpose with Pro Mortgage and Realty. Leveraging credit and income to get the best rates in what you're buying a home. We've been talking about what to pay down, what to pay off, what not to pay off, what not to pay down. The other thing we talked about were collections and bankruptcies and how to increase your credit scores. So also business loans and personal guarantee loans. We're going to get into just a couple things I didn't touch on with student loans. And the student loans are imperative to understand that if it's deferred, let's say.
Yeah, I was going to ask about that because I usually get people that have a deferment.
Yeah.
So how does that count?
If it's deferred, we still have to factor in the payment of 1% of the balance. And if you enter into a payment agreement, which they're all doing now, right, after COVID and all that stuff.
Yeah.
So just try to get the lowest payment possible. If it's lower than 1% of the balance, you're ahead.
Okay.
Right? So try to get that payment as low as you can. The other thing, too, is we're talking also how to leverage your income. Salary versus hourly.
Yes. Can we talk about that?
Yeah.
This comes up all the time. So can you give us the specific on that?
This is a common thread. So salary versus hourly. When you look at an hourly individual that's been working at a job, right, for a year or two, you always need a 2-year history of employment. You can count your previous schooling associated to your current job as a 2-year history. They're going to want transcripts to prove that you were there. Okay. So that's a loop. That's a workaround on a 2-year history of work. But if you're full-time and maybe you're 35 hours here, 32 hours there, 40 hours, 42 hours, and then maybe 35, 32, 31, and you keep on, you don't have a consistent solid 40, 40, 40, 40, 40, then what's going to happen is they're going to really define and do the average over that period of time. And there needs to be an establishment of 6 months, and then they take that average over a 24-month period. Okay. And then, so that's kind of, you don't get as much income. So if you're really, if you get a bunch of overtime one day, you know, 1 week you worked 48 hours, but your W-2 shows 50,000, but maybe we can only use 40,000 of that income. So that's one thing to understand. That salary is the friend of the lending institution. And I know we don't have much time left, but salary is key. If you're going from a job or a promotion and you want to buy a home, and we need an offer letter, and that offer letter needs to indicate what that salary is going to be and if there's any probationary periods. If it does have probationary periods, we can't use that quite yet. Okay? Very clear to understand. So if there is no probationary periods, then we need to see at least one pay stub and an offer letter.
Okay. So what I'm hearing is salary is better. And if you are going to be hourly, you need to understand that they're going to take an average of that past 6 months, you said?
Yep.
Okay. To weigh in on what that average is going to look like. Yeah. And if it's been 48 hours here on overtime and then your main is going to be 32 to 38 hours, they're going to average that at 35. Yeah. Okay.
Unless the employer guarantees on paper that you will be a full 40-hour employee full time.
Now, what about commissions and or tips? How are those calculated?
That's exactly You're thinking right. Commissions and tips and bonuses and overtime, they're all averaged. So if you bounced around from one employer to another, then that really impacts the ability to average it because your bonus, your overtime, your tips will vary depending on where you work.
Right.
So it's a 24-month average. Sometimes you can go 12-month average on bonus, but really if it's a declining number, then they really start looking at a 36-month average. So they really want to see, they go back a little bit. So very important to understand when you're talking to a bank, you need to give them your base, and then you need to indicate how much bonus you had last year versus this year. Okay. And when are those bonuses issued? Are they issued quarterly or annually or monthly? So that has a big impact. Salary, though, let's say you're making $50,000 a year, and then all of a sudden you get a job promotion. Now you've got a job promotion, $150,000 a year. Good job, right? Well, we need the offer letter, and oftentimes there's relocation involved. If there's relocation, we don't necessarily need the pay stub because it's an offer letter. We need a guarantee from the employer and the fact that you've moved, because oftentimes you can't produce a pay stub if you're just moving or you're trying to buy a house. So that's important to understand. Self-employed is the last piece of this. Now that you got your credit up and you're self-employed, well, if you're a business owner, you're a business owner for a reason. You don't like being told what to do, right? Don't tell me what to do syndrome. Like, I have that a lot. Jessica has that. We all do. And so that's why we're in real estate, because you're self-employed, and when it comes down to the don't tell me what to do people, we are always trying to, put the money in our pocket for our families. And we're trying to not pay as much in taxes. We still all pay taxes, but we like to control the ball a little bit. And so, self-employed people will write off a lot of things is what I'm getting at. And what we don't look at is the gross income. We look at the net income. If you want conventional best interest rate financing, then we're going to look at after deductions. Now, if you want a house, you just want something, there are bank statement programs. You need down payment, though. You need 15 to 20%. Some cases 10. Rate goes way up, less down payment. So there are options. There's also no ratio. If you have no income, no money coming into the bank account, there is an option with 25% down on an owner-occupied property we have. And so we've aligned ourselves with multiple types of lenders that will do investment home equity lines of credit, no income verification on investment or owner-occupied, HELOCs. We do.
What kind of score do they need for this?
It ranges, anywhere between 660 and up. Right.
Well, that's a great option for someone who can't, maybe they're doing multiple different jobs and they can't qualify for traditional financing because a lot of it's commission or tips or bonuses or what have you. Great option to still be able to get into a home. I think this goes back to strategy.
Or even tapping into equity. Right?
Oh,
people that don't show up money and they're sitting on a wad of equity. They don't want to sell, but they need money to do more investment into buying more real estate.
Good point. It's really good point.
That right there is what these loans are made for. They're similar to DSCR, but DSCR is different because you have to have your owner-occupied property and you have to prove that you live in your owner-occupied property and own it. So if you have an investment property and you're wanting to expand, all the equity sitting there, you don't want to sell, you can't refinance because you don't show any loot.
Right, yeah.
That's an option. So
I love all the options that you've thrown out today because there are so many. I think the key here is there is zero reason that you cannot get into a home. If not right now, if you've just filed for bankruptcy, 2 years out, but for crying out loud, have a plan in order.
Yeah, we have down payment assistance down to 580. That's
which is
zero.
Incredible.
That's zero down payment. If you have a 580 FICO score, that means you're barely responsible, right? And now I don't know if you should be buying a house if you're barely responsible, but if you have strong income and you had a rough patch or something
maybe you just didn't know how credit worked, and I see this
happens
pretty
all the
often.
Time. Happens all the time. I think that there's options every angle you can go. I mean, we have down payment assistance, loans. You don't need 20% down. You don't need 30% down, depending on what you bring to the table to us, and you have to tell us everything. because if you don't tell us everything, we are going to find out.
Well, I was going to say, Ian will find out. You're about to have a soft pull. He's going to find out exactly what's going on. So it's better to just come and have that conversation and be in control of your situation. I think that's what it comes down to.
Yeah.
We all want to have control of our lives, and you do not have the control when you don't know what's going on. You don't have a plan.
And do this now. If I could tell you right now, Jessica and me also, we seen the market and inventory is going to be tightening up.
It's going to happen.
Rates are dropping. More people are jumping into the market. And last year they go, oh, we're going to wait till rates drop.
Mm-hmm.
Your deals that you could have gotten last year are way less now.
Yeah.
Right. And so it's very important to do this quickly. Speak to somebody. If it's not us, speak to anyone. Or you can log on to promortgagerealty.com. Jessica, you're a key individual in this whole process. So after we get you pre-approved and we go through the process of seeing what you qualify for, what the payment looks like, if you're comfortable making that payment, at that point, we position you with Jessica and or any of her team members, because she runs a nice team here at Pro.
But I try to get with these people as often
and
as
she's
possible.
hands-on. She loves buyers.
No, I am. 20 minutes later, you've got a list of homes, and I show up.
Yeah, and
we did this with the barber, 20-year-old barber.
Yeah.
Love that kid.
Oh, yeah.
He called and said, hey, I had this realtor. She's sending me properties. I haven't seen anything in, it's been 3 weeks. She just kind of keeps putting me off. What do I do?
Yeah.
I heard you were a dog. I said, I will take that, sir. So he said, how quickly will you get me a list? I said, 20 minutes. He said, I have today free. I said, I'll see you in 2 hours. Here's the list. Tell me where to meet you.
Yeah.
We were gone. We started looking at properties that same day. We were in contract within weeks. And we ended up getting in contract on his number one property that was in contract. And I followed up, fell out of contract. We ended up getting it. Oh, I mean, this is follow-up business. That's what we're in.
That's 20 years old.
20 years old.
Cutting
hair.
That
kid does a good fade.
I mean,
you want a good fade? You go see Malik.
All right. Yeah. Where does he barber out of?
Pro style. All my kids go.
Okay.
All my kids go. Yeah, they love him. Yeah, he can do a beard. Like this guy. Yeah, top of the line. Top of the line.
I like it. Well, that guy.
So if you're over 20 and you don't have a plan, I think the moral of the story is you need to call, because once Ian can get you pre-approved and do a soft pull, we're out like same day if you want to be.
Yeah. If you need to get in a house, let us know.
Yeah.
Very important to understand. And Jessica, you have, I know you work with buyers, but you also do listings.
Yeah.
Tell us a little bit. You have a listing coming up or you already have in Sun City, right?
We have just one that hasn't sold yet. We've dropped the price $50,000 below appraised value. Yeah, great deal. But I also take listings on and offer a great friends and family discount. And we do a lot of things that other realtors don't do, like cover all of your inspection costs. We need to know what your liabilities are. You don't want to find that out in day 17. That'll get you.
Yeah.
You don't want to find that out. So we do all of your inspections, have the house cleaned, often handle small repairs ahead of time, get staging done. We have a proprietary way to bring everyone from the neighborhood, to bring all the top agents from here and from the Bay Area. And then we bring a crowd. I mean, Ian does the same thing. Like our team, we are strong when it comes to marketing.
Yep.
Ian is like marketing guru. This guy knows things. So we bring a crowd and we really capitalize on that until we get your house sold. And if the house hasn't sold yet, it comes back to price and we lower the price until we're there.
Yeah. The big thing too is if you don't have money to repair those items on the inspections, we have aligned ourselves with a few companies that will charge you at the close of escrow.
Right.
And so that's great,
Key.
because some people that are selling a house need money. They don't have it. So that's another solution too.
We got solutions, folks.
And you'll get top dollar for your property coming in. And April's going to be crushed. I mean, April and May and just the springtime is going to be insane. Also, that address, how much is it listed for in Sun City? What
appraised value is $700,000. We had an appraisal, of course.
Okay.
We're listed at $650,000, and our address is 891 Slauson Lane in Sun City, Lincoln. So if you want to have a look at the property and call me direct, 916-532-8916. It's an over 55 golf community.
Appraised 700, listed for
$650,000.
$650,000. Why isn't it sold?
We're in a weird time right now. I've had multiple showings, many days of the week, lots of talk of offers, not one yet. So if you want to see this property and get a good deal, call me.
How do they get a hold of you, Jessica?
916-532-8916.
And again, we want to thank everyone for tuning in to the Real Estate Profits with Purpose. Be sure to subscribe to our channel, Pro Mortgage and Realty on YouTube.
Yeah.
Like it. And we'd love to hear some feedback. Going to ProMortgageRealty.com and call or text 916-872-7177 for any questions you have after the show. Thank you so much for listening. Bye, Jessica.